On board with a fundamental guest of the show. We have Kranti Bhatini of WealthMills Securities. Kranti, good morning. So good to have you on the show.
Yeah, thank you for inviting me on your show. Good morning to you.
Kranti, let me start off. We are off to a good December start. Can we say that the bad months of October and November are done and dusted for the markets?
Yeah, seems to be markets are bottomed out, and what we can sense is market has been climbing the wall of worries, despite of the unprecedented selling what we witnessed from the foreign portfolio investors. Thanks to the DIS, who stood rock solid and could able to absorb kind of selling that we witnessed in these months. Now seems to be markets are bottomed out from these levels, but going ahead, how the pace of growth that's going to be in the next couple of quarters, the second half of the year, that is extremely crucial. How the government capex is going to be. So these are the triggers market is looking forward. By and large, markets, we can sense the worst is behind us, and the markets are headed towards the next new highs. But there are some kind of fundamental triggers. Markets are waiting in the medium to short term. But what we can sense in the medium term is we can see some kind of blips. But one thing in this entire saga of last 2 months, sell-off, what we witnessed in the markets and the roller coaster ride, what we witnessed is Indian markets reiterated again. It is a buy and dip markets, definitely. So investors with a long-term horizon, definitely they can have confidence on Indian markets. Any warranted dip in on Indian markets is a warranted buy for the investors.
All right. Kranti, you did mention that the Nifty could be on course to reclaim its all-time high levels as well. How much time do you expect? Any timeline or on the horizon?
Yeah, next couple of months, we are heading towards the new budget, and then market once the calendar year get changed into 25, market could able to look at the earnings of 26 and 27. That's where we can sense some kind of booster and earnings upgradation in the coming quarters. So market could able to touch the previous high, but we also need to closely watch how the US policy making decisions and also how the RBI Monetary Policy Committee roadmap towards the liquidity in terms of the rate cuts is concerned. So these are the major triggers market is looking forward. But by and large, markets are in an uptrend in a medium to long term. As long as we are above 24,000 level, markets trend is in a positive way for a medium to short term perspective also.
Okay, okay. Since we are mentioning that the market is forward looking, we had the bad GDP print as well, Kranti. So now that the street is pricing that the recovery could take place from the second half onwards, how much do you agree with this statement, and do you believe that the government's spending is also going to pick up pace in the going ahead as well?
Yeah, definitely. I'll completely have a consensus view with the street view. The first half of the year, what the market have witnessed and the economy have witnessed was we have the general election and some kind of slowdown in terms of the capex is concerned. And the second half, we have heat waves and also the erratic monsoons that has waived on the economy in terms of the execution of projects. Despite of the budgetary allocation, the capex has been 65% of the budgetary allocation. That has some kind of impact on the earnings and also the global geopolitical issues. What we witnessed in the first half has been weighing on the market. The shipping liners got impacted, the export got impacted, oil prices were in a roller coaster mode. So and also the credit growth has been in a slower pace in the first half of the year. So that has impacted the markets and the earnings of the companies in the first half of the year. So second half of the year, we can expect some kind of pickup in terms of the capex and also the geopolitical issues have been softening. So these are the factors that are going to drive the earnings of the companies in the next coming quarters. And also the crucial thing is RBI Monetary Policy Committee. And throughout the world, what we were witnessing is some kind of softening of the interest rates. But still, India, because of its stance, we had a tight monetary policy. But going ahead, softening of the inflation, and also RBI have a prime responsibility to give the headroom towards the growth also. That's where we get the opportunities for different sectors.
Okay. Kranti, what do you expect in tomorrow's policy outcome? Do you expect a rate cut or there would be no change absolutely?
We can see some kind of feelers that a rate cut can be possible, but we need to wait and watch the commentary, because still inflation is a concern in the first half of the year because of the food inflationary environment. But what we can sense is some kind of growth softening. So, the earlier MPC was concerned? There are a couple of external policy MPC members have been weighing on the rate cut, but those people are right now not in the MPC committee. So it's a completely new committee. So they have been giving more importance, of course, to control the inflation. It's a challenging fact for RBI governor and MPC. One hand, they need to control the inflation. The other hand, they need to give the required headroom towards the growth. So by and large, what I can sense is, even though we are getting a sense of reduction, CRR failures are coming, but the commentary is extremely crucial. So market is looking forward for what kind of commentary. But by and large, market is waiting for a status quo in terms of the key policy parameters are concerned. But we need to see the commentary of RBI, that is extremely crucial going forward. Even though if we get a surprise rate cut or a CR cut also, that can be surprising to the market. But by and large, the commentary, how the follow-on roadmap towards the liquidity infusion and the key policy parameters, that is extremely crucial for the markets going ahead. Because always markets are forward-looking animals, and how the policy action that is going to be in the next couple of quarters, that is extremely crucial. Market have been waiting for a early rate cut earlier, but given the kind of inflationary environment at this point of time, the RBI's commentary is extremely crucial at this point of time.
Okay, Kranti. Kranti, you did mention that, the recovery could take place from the second half. Does this mean that the Q3 and Q4 would be better than what we have seen in the first two quarters? Or what are you expecting from India Inc.?
Definitely. Traditionally, if we go through the pattern, Q3 and Q4 can be the better quarters. So we can see some kind of increase in the demand, and macro environments is improving at this point of time. So that's where the market is waiting at this point of time. And also the geopolitical situation has been improving in the last couple of weeks, and also the new policy making that's going to come in US. So how the entire spectrum of manufacturing theme is going to emerge in India, and how in this bargain India is going to take the advantage in the global trade is concerned. So these are the factors market is going to be looking forward. And the global economy is in a positive way. It's going up despite of the geopolitical environment, what we witnessed. And the Fed policy action has been towards the softening of the interest rates, which helps the emerging markets over a period of time, despite of the medium-term concerns. So the Fed action, the global factors, and also the domestic action, the big event is going to be the India's budget that's going to come in the month of Feb. Okay, these are the factors that are going to, market is going to keenly observe. But by and large, as you mentioned, the first half has been a softening of the growth, but the second half we can expect the complete recovery in terms of the growth is concerned, and also earning recovery.
Okay. Kranti, any sectors that you believe that would shine in the third quarter and you're eyeing on?
For a longer term perspective, what we witnessed is we have been quite bullish with respect to defense as a sector and manufacturing as a sector. Of course, there were concerns because of the humongous rally what we witnessed in the defense stocks. These stocks have corrected in the recent market consolidation and correction. These stocks have corrected nearly 30 to 40% from its peak. So given the kind of the long-term earning outlook, and also earning visibility of these companies are concerned, so still these stocks have a mid-teen kind of returns going ahead also. And the margin of safety is relatively high in these companies. And also, what we are sensing at this point of time is infrastructure and also the India as a manufacturing theme that's going to be the key interesting area going ahead, engineering, construction. Uh, and on a medium to longer term perspective, IT valuations also looks attractive for investors who are investing for a longer term. As we are about to witness the RBI Monetary Policy Committee meeting is concerned, the banking and financial services stocks, majority of the stocks have been in a long consolidation phase in the past couple of quarters. So one can look forward for the banking and financial services for a longer term perspective.
Okay. Banks and financial. IT stocks that you mentioned, Kranti, do you believe that further optimism would build on after Trump's return to the White House? Because the case of strengthening dollar is also on the course.
One thing is what we witnessed is the stocks looks very resilient in the recent past also, given the kind of the U.S. Monetary policy and also the U.S. growth prospects are concerned. By and large, Indian IT companies are going to take the benefit out of this pie, and also the new technologies where the Indian IT companies have been weighing that are going to help them these Indian IT companies over a period of time. It may not be seems to be overnight kind of growth, but definitely on a longer term perspective, it's going to benefit the IT companies, Indian IT companies. So one can look the Indian IT for a longer term perspective because of the policy action in US and also growth respects of India, India and US is concerned.
Okay. Just one last question before we let you go, Kranti. What should investors' trading strategy should be at this point of time? Should they sell on this every rise, or how should they position themselves?
One thing is in these kind of roller coaster rides, what we witnessed in these markets, for a retail investor is concerned, they need to continue their systematic investment plans or systematic investments into direct equity markets. They can continue this pattern. And also, wherever the froth is building because of the digitalization and also the information flow, many of the stocks have been getting into a momentum zone. So investors, wherever the valuations are picking up, one need to book some profits, and Indian markets always giving some kind of opportunity for medium to long term, and the given the kind of the short term dips that we are witnessing, one need to buy on dips for a longer term perspective. Wherever the momentum is picking up, even a relatively longer term phase also, whenever there is a multiplier effect is coming, it's better to take some profit from the table. Okay, some in a medium to shorter term, it's a buy on dips and sell on rally kind of market for a medium to short term. But the long term investments are concerned, one can hold on for a longer term.
Okay, you hold on for the longer term view. So thank you, Kranti. Thank you for giving your valuable insights and your time as well. We hope that we connect with you soon.
Thank you for inviting me on the show.
All right. All right. Let's take a quick check of the markets. Right now, Wilson